Hello, this is Cynthia Fick, and this is the April 29th stock market update. Well, Matt and I have a lot of charts to go through with you today, so I'm just going to go ahead and get started because a lot of things have changed in the last week. First off, let's look at a chart of the S&P 500, and I'll tell you exactly what I am talking about. As I've said before, looking at a chart of the S&P 500, and this goes back to 2021, just showing that we did a 50% retracement from the low that we had in 2022 until the recent high that we had in February 2025. So we retraced about 50% of that increase, and that was about the 4,800 level on the S&P 500. Last week, I said it looked like, we've bounced since then, but it looked like we might go down and retest that low of the 4,800. That just seemed like the logical next step. But last week, when we backed off, the hardcore tariffs, and so the tariff news became less bad, we had a huge rally in the market, and it's hard to ignore. A lot of things happened. On Tuesday of last week, we got a confirmation rally, and it was a very big deal. We have an initial rally, which was tied up in this line here, and then last Tuesday we confirmed it. Let's look at another thing that we watch. This is from Cycles Fan on Twitter. X said, the reason I think the 2025 crash is not the start of a bear market, going back to 1957, there were 5 previous times when the market went down 20% and in 2 months and from the all-time high. And that was 1980, 1987, 1990, and 1998, and then 2020. At that point, all of those kind of 2-month downturns were major lows. So we're talking about more of a V-shaped recovery, which is what I think might be happening. So Matt's going to talk to you about some other things we see going on in the stock market.
Hello, everyone. This is Matt Fick from Financial Life Planners. We're getting both of us this week, and I just wanted to jump into some one of the indicators that Cynthia mentioned, which is the Zweig breadth thrust indicator, which got triggered at the close of business on last Thursday. This is a very rare indicator and kind of tracks quick changes towards the upside in the market. This has happened 17 times since 1945 and signals the potential bull market. How it does that is by calculating the number of advancing shares in an index divided by the total shares in that index and looking at that in a 10-day period. And once it crosses a specific threshold, it really signifies a sudden change of money and in the overall market and increased buying power from an oversold position like we had the past month or so. And here you can see a chart that shows the returns after this Zweig breadth thrust historically. And it's important to note that there are negative periods in here, but overall have seen positive returns 1 year after this indicator has happened 100% of the time. That doesn't mean that it's going to happen exactly like that this year, but that has been what's happened when this indicator has been triggered in the past. So what that means for your portfolios is that we plan on starting to dollar cost average people back into the market. We've seen a little bit of a downturn. The market's kind of shown us what it wants to do here. And that means we can use some of that cash that we raised a month or so ago and start to slowly work back into the market. Some specific sectors that we're looking at are tech sectors, which has done really well in the past, but are continuing to do well here and leading this current rally that we have. Fintech has also done quite well as aerospace and defense type companies we're looking at right now. We've also seen a shift back from value. We saw value stocks doing well in the beginning of the year and seeing that more towards growth company type stocks. Those are some things we could expect to see here, and I'll let Cynthia finish up the rest of the stock market update.
Thanks, Matt. So as you can see, this is not guaranteed type of returns, nothing like that. There's so much volatility and uncertainty still in the markets, but it's such a strong signal, as there were many last week, that it's just really hard to ignore. And so, as Matt said, we're going to start slowly redeploying capital for all the money that, cash we raised when before the market started going down. We may put it back into the market slowly, dollar cost averaging over the next few weeks, just in case there is a pullback. And for those of you that are new to us, we're going to start also deploying some of your capital and just making sure the market doesn't run away from us, and yet maintaining a certain cash level in case there is further downside. So that is your update for April 29th. Hope you have a good rest of your week, and we will talk to you next Tuesday. Bye.